Guys, welcome to another episode of Selling Toronto. I am your host, Pete Lee, and we are here in the office today. How rare this is, shooting a very special episode with my broker of record and owner of Young Realty. So today we're going to be talking about whether condos still make sense as an investment here in Toronto today. But before we get into that, let's ask Stephen a few questions about what he does and what his specialty is and how long he's been in the business for. Thanks for coming on the show.
Well, thanks for having me, Peter. I really appreciate you having me. I think what you're doing is fantastic.
Oh, thank you.
It's certainly needed in the marketplace. There's not enough realtors doing what you're doing, so I appreciate you having me on. For me, I was started in the business about 11 years ago.
Okay.
I knew back then I always almost exclusively wanted to focus on condominiums. It was something that was calling me. It was I always lived in condominiums.
And you came in at the right time.
Loved the condominiums. I came in. I like to say by design, but it was really just coincidence.
Yeah.
But the market really was sort of in its infancy in terms of what you see today.
Perfect. Yeah.
Half the buildings that are currently built did not exist 11 years ago.
Right.
So I was right there on the cusp of this breakout explosion of the condominium market. So for me, I've always loved the business. I started Young Realty about 5 years ago. It was really out of circumstance because what I was looking for didn't really exist, not for myself or for the realtors.
Right.
So you are one of our realtors, one of our top producing realtors here at Young Realty. I think for you and for most realtors out there, you're looking for more than just a sale or a commission. So for Young Realty, what we really want to do is focus on, yes, we'll teach you on the commission side, but also about the information, about the investing side of the business. Not enough realtors invest in real estate, and especially the general population out there. There's only about 4% of the Canadian population who actually does invest in a secondary home outside of a cottage or some type of vacation home. So when it comes to investments, it's a little bit less than 4% of the Canadian population. So what I wanted to focus on was that side of the business because we need to get more Canadians, more realtors investing in real estate. That's really what Young Realty is all about.
Okay. All right. Well, I think that's a pretty good intro and bio for Stephen Young. So we're going to get into the question and answer period. So as you guys all know, a lot of the questions that I ask are things that are supposed to be burning questions, things that people really have on their mind. They don't know who they can ask, but we're going to try to answer some of those questions as much as we can here today, okay? So the very first question I want to ask you, Stevens, you've been investing and selling, condos a lot over the last few years. Where do you see the market today for condos as opposed to, maybe 2005 when you started out in the business?
Well, the market itself today is obviously a different animal altogether. There's a lot more to choose from. The builders are more savvy than they were 11 years ago. The clients are more savvy. They know what to look for.
What do you mean? What do you mean by the builders are more savvy?
Well, they're sort of hip to the game, right? They realize that a lot of people invest in condominiums now. They themselves are understanding the benefits of owning the real estate rather than just developing it and selling it off.
Okay.
So if you look at the trend over the last 2 years, a lot of developers are actually taking back condo units and keeping them for themselves. So they understand that trend. So so their understanding of how hot the Toronto real estate market still is to this day, they understand the sort of forward momentum that the market still has. And one of the things that they're also doing is they're very smart on the contract side of thing. And that's really just a development over time in terms of education, in terms of their knowledge base, in terms of their experiences, their lawyers' experiences of past behaviors of clients and investors.
I mean, I think we're probably on the same page here. So are you saying that the builders didn't really know what they were doing early on in the game in terms of the condo game, or they weren't really sure how the market was going to respond to high-rise and dense living?
No, I wouldn't say that. I don't think you're investing $300 million and not know what you're doing. I think they knew what they were doing. I think what they didn't realize was the uptick in the market trend. I didn't think they realized how many people did want to live in condominiums.
Okay.
I don't think they could have predicted where the market would have gone 10 years ago to what it is today, where it really is a lifestyle choice. And it's not condos back then when I was selling, it was people lived in homes and had a condo for the weekend, or they had it as like their son went to school, or they had something like that. Now it's a lifestyle choice. It's I want to be 5 minutes walking distance to work. I want to be 10 minutes from all my favorite restaurants and entertainment, and I want to raise my children in condominiums and go to the schools that are downtown. That's really the difference, and I don't think they could have predicted that 10 years ago, the way the Toronto market has grown.
Okay, so I think a real burning question that we see a lot from my audience or the clients that I work with is, do condos still make sense as an investment in 2015? And where do you see the market going in the next 3 to 5 years?
Well, I think the first answer to the question is you have to first define what an investment is, either an investment or what a good investment is, because you and I both have different definitions of that.
Okay.
So the quick answer is yes, condos are still a good investment, just like, detached homes are still a good investment. Commercial real estate is still a good investment. Okay, but it depends on who you're speaking with. If you're looking as a first-time home buyer, buying a 20-story commercial complex may not be a great investment off the bat. If you don't have funds and you can get financing, but it's at 12%, that's probably not a great investment. But speaking to a seasoned commercial guy, it may be a fantastic investment. So you really have to first define what a good investment is. So when it comes to the condominium market, if you're a first-time home buyer and you're buying at something at $300,000, yeah, of course it's a great investment because you probably can't get into a $1.2 million, $1.5 million home right now in Toronto. So it probably is a great investment. In condominium markets, a liability is defined as something that doesn't make you money. It actually costs you money every single month. Okay. So your principal residence technically is a liability. Okay, so from that point of view, I would say it's a bad investment if you're looking for an asset class. Okay. Okay, so something that generates you money month after month after month.
Oh, okay.
So some type of cash flow.
So cash flow. Okay.
So when it comes to the condominium market downtown Toronto, do properties still cash flow? The quick answer is no, but yes, you can make them cash flow. Okay, so there's a lot of, I don't think we want to go into the details, the nitty gritty of how to get that, but basically you can still find opportunity in the market for cash flow investment properties. Okay. But you really need to say, is it an asset or is it a liability? So are you buying an asset or a liability? As a principal residence, if you're a first-time home buyer, you need to understand that you're buying a liability. Let's say you're a typical first-time buyer and you put 20% down. Fairly typical. Okay, so you have no CMHC insurance, you have a traditional mortgage, they're at like 2.1% right now, and it would technically cash flow if you had a tenant in there, but you want to live there. Okay, so it's going to cost you a mortgage, maintenance, taxes every single month. Yeah. Plus upkeep. Okay. That is technically a liability up until the day you sell it and actually get back the capital if it's appreciated. Does that make sense to you? So it's an asset as it grows and you sell it at that point in time. Okay. But only that day that you acquire the sale. Okay. So it is a liability up until that day. Now that being said, if you're buying it, if you're buying it as a you're currently tenanted and you want to buy an asset class. Okay, I speak to a lot of first-time buyers and I say, if I can get you into a property that's rented but buy you an asset that pays for your rent, is that okay too? And most people say yes to it, and it would surprise most realtors, but again, here at Young Realty, we're a lot different than most realtors. So I'd rather you stay renting but take what your savings were, buy an asset that's going to start to pay for your current liabilities. Your car, your rent, your credit cards, your spending, whatever it is.
Makes sense.
Does that make sense to you?
Yeah, it makes sense.
So to define what an investment is, whether it's good or bad, it's a relative term. But for now, if you're buying in the condominium market, I would say you're still very, very, very safe, which sort of brings us to the second part of your question, which is where do you see the market in the next 3 to 5 years?
Yeah, I think it's sort of more along the lines of, will we see gains if you were to buy, for example, a brand new condo today? Right. In 3 to 5 years, will you see a gain when it comes time to sell?
I think if you're talking pre-construction versus resale, it's a different question altogether. For sure, okay. Yeah. I think if you look at the fundamentals of the market currently right now and the outlook of the next 3 to 5 years, in Toronto, our fundamentals are very, very strong. Okay, unemployment's super low. Our job rate is through the roof. Your annualized cash for the income is super high compared to the rest of the country. Their population growth, the net migration is like 140,000 people a year. We're only building 30,000 new homes a year. So that's a big trend. Okay, so that is keeping the demand very, very healthy. Right. What's hurt us over the last 3 to 5 years is we had a slight oversupply. Okay, so after the correction of 2008, we had somewhat of an oversupply, which has sort of kept our market fairly flat. But if you look at history, since 2005, the condominium market specifically has appreciated 6% a year, every single year for the last 11 years. Okay, despite the 2008 correction, despite that we're somewhat flat over the last 3 years. So that trend will most likely maintain itself over the next 3 to 5 years. But where I see it going from sort of year 4 and 5 is that supply is now dwindling. Okay, builders have really stopped building over the last few years because the market was somewhat flat.
And it takes a long time to actually put up something.
That cycle is going to hit us in sort of that 3 to 4 year mark, where our market is going to start to take off again through appreciation. Your average return right now is probably about 3% if you're cash flow on any property that you buy downtown Toronto right now. Okay. But if you add into that the appreciation plus the mortgage pay down, which most people don't acquire or they don't account for, that is a double-digit growth in today's market. Okay, and most people can't understand that. It's not because they don't understand it from sort of a mathematical perspective, but they just don't understand how the math works. Okay. It's very simple, but if you look at history, even past 2005, you go back 100 years, the market has always appreciated. Okay, just like the stock market has as well. So that being said, it's quite safe going forward next 3 to 5 years, but I see most of the gain coming sort of that latter half, that 4 or 5 year mark.
So do you see explosive growth happening in the condo market in the next 3 to 5 years?
No, explosive growth occurs when a few things happen, when demand really outweighs supply. Okay, I don't think we're going to see that, so I don't think we're going to have that explosion. Okay. If you look at very specific markets and specific areas of the city, we've seen some explosive growth, like King West, for example. Okay, that was unprecedented growth over the last 10 years. They literally went from about 1,500 resale condominiums 10 years ago to now over 24,000. That's a big growth. But keep in mind, we still have less than 1% vacancy rate, which means 99.9% of them, they're all full with people, either tenants or owners. Okay. So yes, there's an explosive growth, but the demand was there for it. People wanted that location. So going forward, if you segment out certain pockets and populations of people, yes, you will see some of that explosive growth. It is too difficult to predict where that's going to be, so I would not speculate on things like that. But as long as you keep the fundamentals in check and you understand that you're close to a subway system, the population is still growing, you're not speculating in an area that may or may not be good. Right. You want to stick with the 3 L's, which is location, location, location.
Right. Okay. Yeah. Steven's got the stats down and everything. That's good. That's what he does. That's what he does. Yeah. If somebody were to have, I don't know, $50,000, $60,000 to spend today on a condo, should they go pre-construction or should they go resale?
Well, okay, so it really depends on a number of factors, okay? Right now we're selling pre-construction condos to very specific people, all right? For investors, we're actually steering our investors away from pre-construction condos unless they don't want cash flow on their return for 4 years. They're okay to speculate because it all is a speculation, okay? And they're okay. Most of the people who are buying pre-constructions today as investors are parking money for protection of the capital. Right. Okay, so it's like a hedge on the future. If you're a new investor or new buyer or first-time buyer and you're saying, I want to buy a property today and I'll get it 3 or 4 years down the road. Well, there's so much that's going to change in the next 3 to 4 years. Like when I first bought my first condominium, I didn't think by the time I got it, I would have had, a wife and children and all that stuff, but that's what happens. A lot of people it happens to. Or they buy it with their wife today and they're divorced in 4 years from now. You don't know what's going to happen. Right. So if I were in their situation, if 11 years ago when I first bought my first property, my expectation was from an investment point of view only, okay? I was fortunate enough to buy an assignment, the first property I ever bought. I didn't know what it was really at the time. Wow. Okay, but I jumped in knowing that it was potentially a good deal. Yeah. Okay. Yeah. So if I was a first-time buyer in today's market, without speculating and waiting 3 or 4 years, sometimes much longer, look at L Tower, what happened to that? They had a 2 or 3 year delay. It went from a 4-year project to an 8-year project and still not finished. Yeah. You look at One Bloor, that was a 4-year project, it's now on its 10th year. So your money is tied up in this project, so you got to be very cautious about that. If I was a first-time buyer, I would either buy an assignment or a resale property in the condominium market right now. Right.
Yeah, that's, buying assignments is actually a really, really good thing to do. It's a lot more complicated, and that's a whole different subject for another time. And we can explain to you sort of how that works and why it's the best time to buy.